Hello. Today I'm going to talk about a simple recipe that I wanted that does rather quick, aggressive trades, but still stays within a very tight budget. And that is a simple SWMA moving average using the 37 rule with a DCA in strategy mode, although there are a few twists along the way. First, let's start with the basic setup. This is a moving average single line that can be considered the poor man's mesa, as I've said before. It actually finds the highs and lows within a cycle and stays within it. It by itself isn't often profitable because, as you can see here, it's prone to whipsaw. Now you can use signal deviation, as I've done in other videos, to mitigate the whipsaw effect. But for this particular situation, I wanted to try something different. I wanted to see what I could do with this particular system to minimize the whipsaw, but still maximize profit. And as you can see, I've come up with a rather reasonable process. So let's go to everybody's favorite coin and see how it handles. Now you will see long runs like this, and you will see rapid fire short runs like you saw on ADA. That's what makes this coin unique, is it can be short term or long term, and that really just depends upon the coin itself. It's an unusual pattern that can really be used to dial in some very interesting profits. So as you can see with Bitcoin, it takes a bit of a longer term. But even still, there are periods of short-term runs. So let's go back up to ADA, because that is a coin that produces rapid runs for short term on a high consistently level, as you can see here. This is a coin I would use this strategy on. It does well. It does very well, actually. And it's only using $111 budget. I actually have an exit point of 11 on my DCA. So I have a very constrained, very tight budget. And for this particular recipe, if I see any exit markers, I won't trade that coin. I only trade coins when I go through the chart for this system that do not have exit markers. So as you can see, very consistent, very even, no exit markers. Reasonably good profit all the way around. So let's start with the settings. Actually, the settings are even very simple. The settings are, simply put, SWMA for your fast moving average, and the 37 rule. That's it. Everything else is default. I didn't even change how fast the line moves. That's all it changed. Two things, SWMA and the 37 rule. That's it. Everything else is default. No changes whatsoever. I'm not even using confirmation on this. Very simple, very clean, very efficient. Now, let's look at the DCA. Not very much here, but I did add a little twist. I'm using strategy to buy, but I'm using take profit to sell. And my take profit is at 1.5%. I went this way to take advantage of the sell signals in one respect, because you can see they line up quite nicely. But at the same time, I wanted a maximum level of profit as quickly as I could get for this particular strategy. For example, let's set take profit to strategy and actually see what happens to the chart. You'll see that it's not always a good outcome. Sometimes it does produce a good outcome per coin, sometimes it doesn't. Sometimes you can be stuck in a coin longer than you want to be. So there are some concerns in both directions. It really depends on how quickly you want out of the coin on the basis of your trading. For example, ADA looks pretty nice. Let's go down and pick another coin. Let's see how well it looks. Good. But wait a minute, I saw something. Let's go back to that. It would have exited sooner on the take profit, so it stayed in the trade longer. So that is something to be aware of, that you could end up in a trade longer than you might want to be. So let's go down. Adam stayed in the trade longer. Here you see it's, let's zoom into this actually. Okay, here's two good examples right here. Now this gave a very nice profit, but it should have exited here. So this is a case where you have to decide, do you want more rapid profits or do you want larger profits? For my particular situation, I wanted rapid turnover. And in this case, in and out means quicker, shorter term profits and a higher possibility of getting larger turnarounds. Both work well depending upon your budget. For me, this is what I wanted for this situation. But check each coin. Some coins may have a different situation that you need to evaluate. But I wanted everything driven by the strategy for my purchases. Okay, let's come back in here. You can already see here is the DCA exit point. Here is where it would have exited by strategy. The question becomes, would it have purchased here? Actually, it wouldn't have even exited here because the strategy didn't show it. So that's an interesting side effect you want to be aware of. Now you can also play with the price settings. Your budget will be higher, but you can get some interesting profits here. So there are things to be aware of when you're testing. But for the purposes of my intent of this strategy, I want purchases driven by the buy markers, and I want exits driven by the profit. I'm doing 1.5% profit to cover slippage and exchange fees. So for my purposes, in looking at the coins, BAT really doesn't display justice as much as ADA does. But nonetheless, you can see 1, 2, 3, 4, 5% profit in 4 days. Let's go back to ADA. Let's see what that profit looks like. One, 2, 3, 4, 5, 6% profit in 4 days. Now that's just the basic sale marker. If I was to actually calculate that out, it would probably be higher. So for my purposes, with the right coin choice, I'm getting significantly better profit. And the risks are very limited considering. I'm only allowing a $111 budget. My base order is $11 and I exit at the 11th position. So for my budget is only $111 and I'm getting some pretty consistent profits all the way through this. It's simple, it's elegant, it's efficient, and with the right coin, it does a very good job. And let's go back to everybody's nightmare, Black Thursday. February and March. Let's see how this performed. Again, looking at the markers. If you're looking for long-term trades, it definitely does it. But notice, even in the worst possible situation, with just a very small budget, it doesn't exit out. It doesn't break. It still stays within its budget, and it makes a profit. So even if you're looking at a long-term position, you're going to be close to your threshold in this case, but it's still going to be a very generous profit. So always look at different time frames. Let's see how many this actually took. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 positions. That's cutting it a little close. But considering how many people lost money, this thing pulled off an ace. So there's certainly nothing at all wrong with this kind of a process if you want a slightly more aggressive approach. And even for smaller time frames. Now your budget will be significantly higher. I am going to warn you of that now. The smaller time frames do require more budget. And you will find coins at this setting that do exit out. But still, considering, look at these profits. If you have the risk and the budget for this kind of a process, this does very well. So if you have a $200 or $300 budget at the 1 minute mark, and you set yourself up here, this is going to bring in quite a bit. And it's going to do so quite quickly. Look at how many trades this has been. Let's just go back to June 1st. Excuse me, July 1st. Okay, so right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 20% profit from July 1st to now on the 1 minute mark. And this is actually set to 1.5% take profit, which means if your exchange moved quickly, this could have done a very handsome job. Now I got lucky here, I didn't have any exit points. But some coins will. So you will need to be aware of your budget. I would say probably a $200 or $300 budget on this kind of a process at 1 minute would do very well. But again, run back through the entire process. This is a case of where a larger budget may be more beneficial and appropriate to what you are looking for. So this is a very, very nice little run. Now here we go into quite an extensive run that's several days long. These kind of runs can cause problems if you don't plan your budget. But still, careful analysis and the right budget, and this is a winning procedure all the way through. This is a good coin. I would actually have no problems trading this coin at this level, full well knowing the risk that I could easily hit my exit point. I, though, would probably up my exit point to at least 15 or 16, just for safety. But still, this is good. But for most places, I personally think the 5 minute is the best choice. It's the right balance between aggressive and long term. And the right coin can produce some very good results. Plus, having a very tight budget can let you trade more than one coin, which helps you reach your break-even point. So, 20% of $100, this thing could have probably brought in $20 for the duration. That's reasonable, that's acceptable, and that's certainly worth looking into for advanced testing. Run through all of your coins, check them carefully. Some coins are not going to be worth trading. Some coins are just garbage all the way through and through. This is a coin I personally would not trade. I don't like the run and the length it's taken, and it's already up to 8. So I personally think this coin doesn't have the market cap or the liquidity to support this kind of a trading. But let me get to one coin in particular that is notorious. Raven is a nightmare coin. It is just not a good coin. It can cause a lot of headaches. It doesn't have the liquidity or the volume. And if you're not prepared for it, it will burn you beyond reason. This coin is just not a good coin for most people to trade, unless you have the budget and understand the risks. And you do have to understand these risks very carefully. This looks nice, but when you look at all of the time frames, and you need to look at every single time frame, you quickly realize not all coins are the same. You quickly realize some coins just too bad from beginning to end. Durations like this are not something I particularly want to hold on to for a coin at this volume level. This is not a high market cap coin. Do not underestimate just how difficult a coin like this can be. Always trade the best quality coins. When you see price action like this on a routine basis, be very wary that it will have a significantly higher risk, and understand what those risks are. Do not underestimate the difficulty of low volume coins. Some coins are questionable. They'll do good, they'll not do good, they'll have runs and seasons. I like this coin. I like what it produces. I don't know if it's worth the risk for my current portfolio. As you can see, it has quite a few runs, and it gets close to my budget line that I'm willing to spend at this point. So, I try to keep my coins below half of my total budget as a routine practice. So if I'm looking at a budget of, say, $100, I don't want my coins in general going above $50. I allow a little extra just in case of an unusual market situation, but for the most time, and for the most part, I try to keep that boundary very consistent. Good coin, but this would need a $200 budget. Not something I am looking for at this moment. So as you can see from my own alerts, each coin, roughly $100. And that's important, as I need my coins to work to the best of my budget. And at this level of my budget, I can't afford a lot of exits, because that's going to eat my profits horribly bad. So it's important that you focus on quality of coin. Some coins here are questionable, like this one. This is a very questionable situation. And it's one that requires a lot of care. I do not recommend this for most people. Quite frankly, I don't recommend going below the 5-minute mark in most cases for a lot of these set particular recipes, because they do elevate the risk extremely. Now I'm running a slightly higher level on this coin, but still, as you can see, it's not an easy coin to work with at this level. It's not something you should do routinely. And I only have one coin out of my entire portfolio at this level of risk, because I know this is high risk. Right now, this is what I call a gambit's blade. If it works well, it will profit generously per day. But if it goes bad, it will go horribly wrong and eat my profits up considerably quickly. So this kind of a process is not something you want to do on a routine basis. This is something you spend a lot of time looking at. This is something you spend a lot of time studying. This is something you actually take the time and manually write down every single price action and compare it. You just don't make these kind of trading decisions easily. So if you do want to take on a high-risk situation, in this case, of all the coins I trade, this is the only one that is high risk. All the rest are extremely low risk. And that is important. So let's see if I'm still logged in. Actually, yes, I am. And for a lot of these high-risk situations, I sell manually. I don't wait for it to necessarily get out. I sell manually. Because I know I am taking a high-risk situation. And that is something you need to be aware of. There are risks involved. You have to understand those risks. So let's take a look at my actual profits. And you'll see where I sold a lot off manually. And I also used low profit thresholds just because of the way the market felt to me. So even if you have a good strategy, sometimes it's just not worth the risk waiting for something to get out. For example, here, 3% profit. 3.74% profit. I would not have gotten this if I had waited on a strategy. I would have still come out with a 2% profit, maybe a little better, but I wanted that little extra bump. Now sometimes this can go against me and a coin will turn around and climb on me, but that's the risk you take. Never chase profits. I got a nice clean profit, I got good profits, I got consistent profits. So that's something to be aware of. Don't underestimate your profits and don't chase what you don't have. And overall, as you can see, I'm doing very good. Very low budget all the way around. My highest coin is my risk coin. All the rest of them, 1 or 2 positions only. And you can see how very controlled my whole budget is. That's all I have at risk right now. And yet I am bringing in all of these profits. Take a look at the times and the dates. This is not bad for the risk. But you must understand the risks, because these kind of situations do happen. So if you have the risk for a high yield, strategy, then this is a good, reliable one. It does very well, and it is very simple. Your fast average, SWMA. The algorithm is the 37 rule. Sweet and simple. Dollar cost averaging. Strategy to buy. Take profit to get out. For me, 1.5% profit. If you're on Coinbase, where your total transaction fee is going to be 1%, I would say set this to 2%. Take profit. Make sure you understand your exit position carefully. And here, if I wanted to set up a coin right now I am 2% under the average. So if I did a manual purchase, meaning if I got in right here with no previous positions, by the time this went up, I would get a nice 3% profit. Not bad. So just because it's in the flow doesn't mean you can't pick up a manual position and actually reap the benefits of this incredibly generous profit. It does take a little care, but don't go crazy with it. 1 or 2 positions for a reasonable budget, getting in like this, can be very nice. So, look at your options, look at your budget, take careful consideration of your risk assessment, but if you're looking for a nice, high yield, reliable recipe, then this is probably one of the more generous ones. And it is one of the easiest ones to set up. It does very well and very consistent. So make sure you understand all of those details. Now this is at the 1 second. I personally would not trade ADA at 1 second, but I definitely would trade ADA at 5 minutes, and I do. I'm often asked, what coins do I trade? Well, right now, this is my coin list. ADA, Algo, as you can see, it's actually got some interesting selling points here. BAT, Engine, ETH, Link, my high-risk Gambit, Nano, Augur, this is an unusual coin, and 0x, another unusual coin. Not coins I would recommend trading for most people unless they've spent time studying the chart. But Augur can be surprisingly profitable. Providing you're not timing out. So as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10% profit, and 2, 3, 4, 5, roughly 7 days. So that's a little over 1 1/3, 1.3% per day. That's not bad. That's pretty good for one single coin. So it's an unusual coin, but it does do a good job. 0x is much the same way. An unusual coin, but it does do a good job. It has its own risks, but as you can see, for the same 7 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13% profit. So for $100 total, this would bring in 13% of that. So at most $13, depending upon your profit basis. Although I think it's probably going to be closer to $1.3, considering the price value of 0x. It's not really a good market quality coin. So I'm going to say good rough result will be $1.3. That's still not bad, especially for this coin. So while you are not necessarily going to get rich quickly or at all, if you have the budget for your position size, for example, if each one of these were $100 trades, then it would definitely be a $13 profit off of one single coin. I'm only doing $11 trades, so off of $11 total, I'm only going to see $1.3. That's still pretty good and pretty generous. So take your time, find the good coins, and take advantage of a very nice, high risk, high frequency, but yet extremely stable approach. Until next time.